Hi, I'd like to share with you some perspectives on what we are looking at for the second quarter of 2024, things that are happening around the world and in markets, and how that could impact your investments. So as a quick sum up, I think we are in the all clear currently. Risk of recession is low, stress levels are actually very low, and if you're worried about geopolitics, actually, as long as those the first 2 points that I mentioned are actually not on the horizon, then geopolitics shouldn't have a very big impact as to your portfolio, your investment portfolio, and market prices. The data I have here basically shows the global recession probability model versus an all-country world index, basically an index of global stocks. You can see whenever recession risk is high in the red area, the probability of stock markets suffering a little bit more turbulence or a sell-off is high. So what the recession probability model basically includes will be current economic input and also leading indicators to give us an idea as to whether the economy could be heading towards a poorer state. So these are areas to watch for, but currently you can see now highlighted in green, this is where we are in 2024, and the risk of recession actually has declined steadily since 2022. So as we are currently in the all clear in terms of economic data, we are unlikely to see very much of a larger sell-off going forward. For the next slide here, we can see that there are various indicators of stress, but overall we have an aggregate indicator shown in the orange line, and we have various stress indicators broken up within the major economies. Basically includes all the inputs as to whether money is flowing in the right direction. Are banks lending to each other? Are there certain stress points that investors are pricing into the market? Whenever stress levels are high, the tendency for the market to suffer more volatility and a larger sell-off will be high as well. But currently now we are actually at very, very low benign stress levels, and this coincides with past periods. Whenever we are in low stress environments, the market is actually in a very good environment to continue rallying. The next one I want to share would be geopolitics, and I'm sure everyone is still worried about the ongoing war, especially the Russian war and also the conflict in the Middle East. You can see from this long-term chart that we've experienced many types of geopolitical events in the past, and for the most part, you don't see a very long-lasting impact unless these events happen during a recessionary period, which is shown by the grey shaded area. So the key takeaway here is basically that the recessions and economic downturns are actually a little bit more important as to the direction of the market instead of these isolated geopolitical events. But then, of course, at the end of this year, we have this big event coming up, and that's the US presidential elections, right? So you can see actually for the most part, for the longest term, you can see the very long-term chart here, and the market performance during different presidencies, red being a Republican president and blue being a Democrat president. And there's actually no clear pattern as to whether, a Republican or Democrat is better for the market. There's a lot of people who say that, a certain party is a little bit better for business or, a little bit more market friendly. But if that was true, then we could see a clear pattern here, but actually there isn't. So if you're worried about who's running the US and the impact on markets, you should not, because there isn't any clear sign as to who is better. And I think we should be looking at other data that actually does impact markets more, which are some of the key points that I've mentioned earlier. We are actually in a good environment going forward into this quarter. I don't think you should be so worried unless some other new thing pops up on the horizon, but then again we'll be on the ball to update you what's happening. So for the most part, we expect an ongoing market rally to continue at least over the next few months.